All right, Monday, and to be honest, as you can already tell, started off with a loss. That's all right. I do think this was a really good setup. Um, so let's get into it. I don't even know where to start. I probably should have planned this a little bit better. But again, I only do these videos for myself. So going in today, I was a little weary because Friday was a holiday. And then, so all of the price action for Thursday night into the Friday holiday is accumulated into today's price action. And I feel like every time there's a holiday, things get weird in price because on the daily time frame for today, Monday, July 6th, it says we went down and touched regular trading hours closed from Thursday. And I use regular trading hours close as a draw because we either go, we go towards it at some point, whether it's 50%, 25%, 100%. We like to draw towards it on the majority of days. I even have the regular trading hours, opening range, gap, consequent encouragement. So 50% between Thursday's regular trading hours close to today's regular trading hours open. Um, as far as higher time frame, I don't think only thing I really used was a 4-hour premium wick right here. This wick, 50%, drop down. Um, yeah, I didn't have a good anything good going on. It was mainly on the 5-minute and the 1-minute that I was looking at. Well, I did look at the 15-minute and I noticed this 15-minute BPR. We made a fair value up on this side and this side, but my take profit was actually right here if it would have been hit. So just an I wasn't asking for too much, and if it would have hit a 15-minute BPR, it would have likely had to go up. So I was just looking at a really good, really small short, low risk day. On the 5-minute for that 4-hour premium wick, we get a look how clean this respect is. 4-hour premium wick. None of this price action was here. I shorted in this 5-minute candle. On the 5-minute, the bodies just caress that consequent encouragement of that 4-hour premium wick. And it looked suspect to me. So I dropped down to the 1-minute, and on the 1-minute, we get a 1-minute OTE. Look at the candle bodies respecting OTE. So 5-minute respects 4-hour consequent encouragement, 1-minute OTE, and then on top of that, we get a 1-minute mark short shift. So you get a 1-minute high cleared, a 1-minute low cleared with a 1-minute fair value gap. Now, and then not only that, but 1-minute change of state delivery. I wasn't going to enter until I saw a 1-minute candle closure below this 1-minute change in state of delivery. So we got 4-hour premium wick respected. 1-minute OTE. One-minute larger shift. I know this seems like a lot of 1-minute stuff. 1-minute change in state of delivery. I didn't. Oh, are my positions not on here? Oh, I'm on the wrong. This side. We can go back. We'll switch to this side. So I didn't enter on this candle right here or this one or this one really. I was just like a little weary of this, to be honest, because right here it's at 10 a.m. and I don't like to enter at 10 a.m. On the hour change in the middle of the macro, I don't like to enter. It seems that like when an hour opens, there's some type of manipulation. It has to create the wick to the top side or to the bottom side of that 4 hour, 1 hour candle change. So there's always a little bit of choppiness. We close above it, and right here, to be honest, I was thankful that I didn't enter here or here. But then we closed below it, and I was like, when you inverse a fair value gap, the probability of it being used to move somewhere is even higher, in my opinion, along with my bias. So after I saw all this stuff, I'm like, oh shit, on that 1 minute mark structure shift, we get a 1 minute inverse fair value gap. Bam, what's it do? Trades up into there, and I enter. I'm like, enter here, stop loss above this high, only $1 above this high, take profit. I see these two relative equal lows right here that would have just dove straight into that 15-minute BPR. Because there's that 15-minute fair value up on this side, fair value up on this side, so 15-minute BPR. That would have literally just, all I would have had to do is just touch this 15-minute BPR, and that would have been good. Remember, 5-minute perfection, 1 minute OTE, 1 minute mark share shift, 1 minute change state delivery, 1 minute inverse fair value gap. The only criticism that I have on myself here, which I still, even though I got stopped out, feel like this was a good trade. So I'm not mad at all. But one thing I have been learning since I started making this YouTube channel, and this only a week ago, when the Fib retracement, if candle bodies close above 79% retracement, and I've talked about this in 2 other videos, you're most likely not going to take the trade. And I saw this, I measured this out, and I was like, ooh, that's kind of bad. But once we closed below this fair value gap, I was like, you know. But once I got stopped out, I noticed something. See how it closed above 79% retracement. And in my other videos, I say when that happens, you flip the Fib. The hell? Clicked on the wrong one. You flip the Fib, look at this. Oh my goodness, man. Not that I could have seen that then, when I was in the trade, yeah, I could have measured it out, but I would have had to wait until, this candle body closure to be like, dang, we just respected 79% retracement, and now we're going to the top side. By then, it doesn't even matter. I'm so close to stop loss, it's like you might as well hold and see if it plays out. But that's all the notes I have on this. And the Fib retracement, the importance of the Fib retracement is astronomical, in my opinion. Like, I've proved it in 2 other videos how the Fib can get used in multiple ways in ranges, and almost every single trade has some sort of respect on the Fib retracement. You're gonna tell me it disrespects it here, so that's like a bullish shift, respects it here, and really my entry should have been here with a easy 1 to 2. But that don't matter. One other trade I want to go over, or not even trade. I didn't take no trade last night, but before I went to bed, I was going over some of last night's price action, and I noticed something. Last night we opened right here. I see this, big shift down lower. So this is a 15-minute shift without a fair value gap. Gets a change in state delivery right here. So the 15-minute closes below there, change in the state of delivery. Look at this. Goes up, doesn't quite hit 79% retracement. It's dropped to the 5-minute. 5-minute. Does the same thing. Just 5 minutes change in state deliveries here, and the 15 minutes here. Well, you get what I'm saying. But the 5-minute creates a 5-minute fair value gap. Along with still not breaking OTE, and the bodies stay around 62% retracement. Drop to the 1-minute. And you get a 1-minute BPR. Look at that. 1 minute inverse fair value gap or 1 minute BPR, however you want to look at it. But you have a 15-minute shift that respects OTE, a 5-minute shift where the 5-minute candle bodies stay within the fair value gap. $15-minute OTE. We're gonna write it down because I always like writing it down. We're gonna write it all down. Five-minute bearish fair value gap. 5-minute CISD as well. I see how these really can add up. I don't really feel like I need to put 5-minute OTE because it's a 15-minute OTE and it's 1 minute OTE. I mean, it all like lines up, right? So this OTE works for the 5, 15, and 1 because we're measuring from the same high to the same low. And the 1 minute never pushes through it, never closes above it. 5-minute bearish for value gap, 5-minute change to delivery, and then 1 minute BPR. Guess what? All in the 8 p.m. or 9 p.m. macro. Look at that. That's in a macro. 9:55 or 20:55, depending on how you have your clock. 9:55 last night. This thing just taps the consequent encouragement of this BPR and then runs. I mean, that would have been a rewarding trade right there. And I even bet that on the 1 minute, if you were to do this, enough said right there. Enough said.